Is it time to sell your stocks right now? This warning we've been talking about for the last few weeks is starting to give us confirmation or a red light. And this is at a time when Warren Buffett is selling over $75 billion worth of stock, including more than half of his Apple stake. And this is a guy who tells us to be patient. He says the stock market is a device for transferring money from the impatient to the patient. So, what does he know that we don't? And why is he dumping so much stock? Well, it might have something to do with this red light. And we'll come back and talk about that a little bit later in the show as it relates to our 4-step recipe for more confirmation. All right, we got a heavy show this week, so let's jump straight in. You might be wondering, what do I do with this data? Why is he dumping? And why is he not being patient? Well, that's exactly what I'm wondering. And I think you might know something here. So we're going to go through and talk about that today. But if you're hoping for an inter-meeting announcement from Jerome, I don't think we're going to get that. I think it would actually show even more unease for the market because the Fed would not feel confident. I think it would be a panic. But if we think about this, we're not going to hear from Jerome Powell in the Fed in a more official way until August 22 to 24, which is when they have Jackson Hole before they go back and meet for their September meeting, which is when we are expecting the market to cut. The VIX is pumping too. It's no longer in the teens. It has rocketed higher by nearly 40% in the last week. And stocks are clearly on the decline in the last week. There are some pockets of health here, but generally speaking, these are not things which really exude confidence. Credit cards, consumer non-durables, healthcare, those are usually recession stocks. So this does not give me those warm and fuzzy feelings, and maybe it doesn't for you either. Why? Well, the market's now back down here to 27, a huge move lower from just where we were on Thursday and basically half of where we were a week ago. There's panic out there. There's geopolitical tension. Again, encourage you to read more on this headline if you want. And then we got people like Bill Gross telling us that don't buy the dip on stocks while Warren Buffett's move hints at a sell signal. Well, who is this guy? He used to be called the Bond King. There's a reason why he's not that title anymore. But anyways, he tells us to pay attention to Warren Buffett's indicator. And here you go. The S&P 500 is incredibly dangerous. Why Warren Buffett's favorite valuation indicator is flashing warning for stocks. It's basically the GDP compared to U.S. stocks. And if we look here, if the ratio approaches 200%, as it did in 1999, it might be bad. You are playing with fire. There you go. Buffett said it in a 2001 quote. And I'll show you exactly what that means here. It means the U.S. is broke. If we look at the U.S. GDP at 28 trillion, and we look at the national debt at 35 trillion, the numbers are not great. We look at the total debt here, it's 101 trillion. So I'm not smart enough like Warren Buffett to go through and give you the excerpt. Again, read through the article if you want. It basically means that people are piling on, and that's why we're getting fear, right? Everyone's like, oh my God, recession's coming, and we got AI fizzling, and oh my God, sell first, ask questions later. Yeah, that's exactly what people are doing. Sell first, ask questions later. Just in the last one day, Bitcoin's down by 3%, and in the last week, it's down by 11%. And this is interesting because this is something we can actually get a quote on the weekend. And just in the last 24 hours of the last day, Ether is down by 5.6% or 16% in the last 5 days. So much for the ETF moving it higher. And this is a week where we don't have a lot of economic data. We do have a 10-year auction on Wednesday and a 30-year auction on Thursday. And we do have earnings, but the big guys have already reported. So I don't think that these are really going to move the market. But stocks like Supermicro, Shopify, Uber, Airbnb, those can definitely have an impact on the market, but I don't think it's going to move things at an index level. So what this really means, like I said, is that people are fearful we're going into a recession. And just before we jump into what that means, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. So if everything's going to go down, 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 and Warren Buffett is correct, which means that his indicator is flashing a sell signal, and he's selling first, asking questions later, raising cash to be patient. Remember, he's also a little bit old, and his business partner recently passed away. So with a record cash pile, what could he do? Well, he could give the person taking over a chance to make bets of their own and not inherit only what Buffett has. Is that what's happening here? Man, I don't know. The guy's pretty smart, though, and he's been selling for a while, selling BYD, selling Bank of America, selling Apple. Yeah, he's selling some of his biggest holdings. And I think people are starting to notice that. This headline only crossed after the bell on Friday, so we don't know what's going to happen here. I'm going to be watching for it. But all right, here we go. So if we're going into recession, a lot of this has been sparked by something called the Sahm rule. So the Sahm rule has a 100% ratio going all the way back to the early 1970s. This basically means that when the unemployment rate moves higher by 0.5%, like you can see here, right? The gray line is going to be a recession. So going back to the 1970s, when the unemployment rate rises by 0.5%, recession. Again, we're looking at the gray area. Gray. Unemployment goes up, recession. Unemployment goes up, recession. It goes up, recession, goes up, recession. So everyone's assuming the same thing's going to happen here. And I don't know for sure, right? History doesn't seem all that good right now. And it seems like people are selling first, asking questions later. But unemployment is not how the economy is actually measured. This is a lagging indicator is what they call that. If you look at something like a GDP, which is more accurate because it's how we determine a recession, well, if we go back to Q1, 2.7. This is according to the St. Louis Fed or the Federal Reserve's, again, the St. Louis Fed branch. They tell us 2.7, 2.6, and 2.5. Yeah, it's slowing, but it's coming off a pretty high base. And please remember, in order for there to be a technical recession, what do we need? We need 2 quarters of a contraction. So if it's only 1 month into the third quarter, but as of right now, we're at 2.5, when would the earliest we could start a recession would be? Well, that would be in January. Actually, sorry, let me just double check this. So Q3, no, sorry, that would be Q4. So we could start in September, right? I'm confusing myself here. 1 second. So October to December is going to be the last quarter. So that'll be 3 months. So the earliest we could be getting confirmation would be in October, which will be reported in November. And when will we actually get confirmation of a recession? At the earliest, if this number holds up and it is positive, that means the earliest we would see it would be Q2, or basically the start of the second quarter next year. That's like an eternity from now. You guys seen what's happened in the last 1 to 2 weeks, right? Potential president no longer being around, geopolitical tension, right? We got a Fed that's too tight, going to make a mistake. Earnings aren't delivering. Man, there's lots of things to worry about. Yes, there are. But let's look at the number here, because if GDP is largely how we determine a recession, are we actually getting those recessionary signals? Not yet. Not right now. It could happen, but I've just told you that it's not going to happen right this second. If people start to see this number here, which is as of August 1st, and they compare it over to the core PCE, what does it show us? 2.6, 2.6. So again, please just bear with me. If we look here, 2.7, 2.6, 2.5, that's for growth. Okay, inflation, 2.6, 2.6 on the most recent readings. What does that mean? There's no growth. There's no inflation. If you take the 2 out, what is that? It's a soft landing, in my opinion. Here's where things get a little bit tricky. What the Fed has said is that sufficiently restrictive is going to be the PCE plus. I think I actually had this written on a Trello card, but I don't have it prepared ahead of time, so I'm not sure if I'll be able to actually get this. 1 second here. Here we go. I actually have it. Perfect. So if we have a look here, sufficiently restrictive is going to be core PCE plus 1.6%. Right now, the Fed funds rate is at 5.33. Core PCE is at 2.6. So what does that mean? Well, it means the Fed is like really restrictive right now. So if we go here, 4.6. So we go 2.8. Let me just pull up the calculator. I'm doing this live, so it might take a couple of minutes, but hey, I want to show you exactly what I'm looking at here. So I'll update this after. If before we went down by an additional 0.2, we were due for 0.5, 0.75 or 3 cuts of 0.25. Hey, we're probably due for 4 cuts now. And the market's pricing in 4 cuts before the end of the year. Why? Because that just means that gets them back down to no longer sufficiently restrictive or normalizing rates, which is exactly what Jerome Powell had to say. So if I'm confusing you, again, if everyone's worried that we're going into a recession, let me find that picture here. It's only going to be confirmed when we get a negative quarter of GDP. As of right now, we're not. And yes, there are fears we could go into recession. Could it happen tomorrow? Sure. Do I think it will? Hey, I'd rather look at the data, like Jerome Powell says. And now there's some urgency because people are feeling a little bit uneasy about where we could go from here. So with all of that in mind, I think what we want to do is just wait to see more data. I know that sounds really simple, But let's look at it from this time frame. Okay, if we look at the weekly chart, where are we? Well, we're right on our uptrend, which should be support. However, if we look at this objectively, we got 3 weeks where we close below the low with red candles and volume is actually increasing, which means that people are starting to get worried. What I would look for, because as we looked here at something like a Bitcoin, yeah, it's been selling off all weekend. Look at that. So when we wake up on Monday morning, what will SPY look like? What will it look like on Tuesday? I'm going to assume we're going to print a weekly lower low. Why? Because closing at or near the low of the candle usually implies we get downside momentum. And with that Warren Buffett headline, I think people are going to be a little bit in sell mode. All right. So if that's the case, I want to see whether we end the week with a failed breakdown or if we don't. Why? Well, a failed breakdown is a potential bottoming pattern. Keyword here being potential. We can't go back up until we expand or close over the previous candle high. So to make this easy, I don't think we're going to get that signal this week. If we're going to hold our uptrend and push off of here, we're likely going to have to wait until the end of next week. Why? We want to see an expansion signal before we get overly bullish. If we look here to the monthly chart, same thing. What do we have to do? We have to wait, right? So far, we've printed a monthly lower low. We have to close below once, which if we close below 537, yeah, we're moving on to stage number 2. Then from stage number 2, we move on to stage number 3, which means printing a second monthly lower low or starting a pattern. Then we have to wait to close below that before we get confirmation. But what I'm trying to tell you is that we've been talking about this warning for at least a few weeks. And before we crack these higher time frames, we got warnings on the weekly and we got warnings on the daily. So if now we think about that, are we likely going to get those same warnings on the 1-day chart? 100%. If we have a look here, I often talk about the hollow candle. Well, look right here. Ever since we formed our all-time high, how many hollow ones do you see? I see 1, 2, 3. That's it. The rest are full, which means that on average, the market is closing lower than it opened as volume increases. It doesn't look like the selling's done. We look to the NASDAQ, same thing. A trap by breaking the downtrend. And as you can see here, largely red full candles. But here's the interesting part. A lot of stocks actually slammed right down to their 50 DMA. If you look here to the Russell, pre-move, after move. What is it? It's a back test to the 50 DMA. If we don't hold this area, I would argue the rotation trade's not really working. So what's going to happen here? Dead cat bounce and go lower, or hit it and then go back up higher? I don't know, but it's ironic that a lot of charts are actually hitting their 50 DMA. RSP, which is where rotation should also be going. I'm not sure if all these other ones act. There you go. There's the Dow. So just between those 3 candles, without looking like, let's just look at XLV. Just one last one. Nope, that one didn't do it. But for these 3, which I would argue are fairly important, what happens here? Do we bounce off the 50? Do we lose it? Because like I showed earlier in the show, the VIX is on fire, right? It's going up so much, so fast. And if people are not going to be raising cash and buying other things or buying the dip, that's what I would look for. Notably, IWM, RSP, and a few other key charts. All right, with that said, if you want to tune in and hang out with me on Monday, click on the left. If not, watch the video on the right. And thank you very much for tuning in. Good luck out there.